give you the markets update now. The JSE expected to struggle in early trade after the U.S. Fed minutes. And these minutes from the U.S. Federal Reserve last night's meeting indicating that policymakers were in favor of a 50 basis point hike, but held back due to the war in Ukraine. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers. He joins us now to try and make sense of the market moves this morning. Dr. Masilela, thank you very much for your time. Give us your sense of how the markets are performing, keeping in mind the U.S. Fed minutes and what they mean for the global economy.
You are right, Koli. Good morning to you. The market opened in such a way that we are struggling, opened down 0.4%, led mainly by resources and financials. And it's all because of the comments or the statement that we got from the Fed minutes that the guys, number one, they are prepared to increase interest rates aggressively and also to reduce their balance sheet. I mean, when they start reducing their balance sheet, basically it's quantitative tightening. So all they're doing, the guys, they're removing liquidity within the economy, and that's not okay for the general economy because the markets have been spoiled, been used to cheap money, and as a result, the markets, we know, just like the economy, they can stand the increases in interest rates, but when you start to increase rapidly or aggressively, then that becomes a problem for the markets going forward.
Yeah, let's talk commodities. The prices there, volatile so far this week. What's driving that sentiment?
Very volatile, and it will continue to be volatile, especially when you look at oil prices. I mean, yesterday they were down 5%. Today they're trying to recoup all those losses. And the reason being, we've seen the U.S. saying that they will release almost 180 million barrels of oil from the strategic reserves. So yesterday we had members of the International Energy Agency saying they will release 60 million. So that helped, to at least lower prices. But the truth be told, that's such a short-term thing. What will help oil prices to go down permanently, it will be if there's a distraction when it comes to demand, or if maybe we get some recession. So as it stands now, markets are all depending on what's happening with Russia and Ukraine situation. Dollar strengthening, then that makes it expensive for holders of other currencies to be able to afford those commodities as well.
Talking about energy, the Department of Minerals and Resources and Energy formally inviting bids for renewable energy in the 6th bid window of its Renewable Energy Independent Power Producers Program. Talk us through those developments and what they mean.
Very encouraging to show that at least we are trying to do something, but the reality is something else. Why I'm saying that bid window 5 is only yesterday that we had Eskom saying that in principle they are both have agreed to sign on the agreements, and yes, the guys will probably get the lowest price ever, but it has been taking long. We know we had also the risk mitigation supply over 2000 as well. Nothing has been done. Financial closure had to be extended. So it shows you that as much as you are getting all this to be advertised, but the actual thing, when are we going to have energy delivered into our grid, it's something to be worried about. Yes, we know that bid window is also looking to get at least 2,600 megawatts, but the problem still remains that when will all this come into play, as we know that we don't have time when it comes to energy security. And yes, also it's encouraging that the likes of wind gets to be considered again, with the rest going to the PV solar. But our problem still remains that we've got people taking all these processes to court, and as a result delaying the delivery of the necessary energy that we need. But generally, I guess it shows good intentions.
Yeah, let's wrap it up with Pick n Pay releasing its trading update, which shows that the retailer delivered a 5.2% rise in sales. Talk us through their numbers and how the company performed versus other retailers.
I think that's solid performance, and as that, from that 5.2, 5.1 comes from South Africa, 5.6 from the rest of Africa, and the guys continue to deliver on their commitment that they're going to offer us lower prices and value, and that we can see on the internal selling inflation. It has been restricted to 2.9%. Yes, we know the unrest affected them. We know that the June restriction when it comes to liquor trade affected them, but the guys as well, they've managed to make money still being the case because profits expected to go up by 18%. Clearly, the guys lost almost 66 of liquor trading days, but when you look at the sales growth of liquor, it's up almost 57%. The clothing division continues to gain market share, and yes, when you look into their app online offering, over a period of 2 years, we've seen a growth of almost 72%, and given the disruption and they are focusing on trying to rebuilding their stores and the distribution centers, the company still managed within that period to open almost 138 stores. So I think their performance has been very resilient so far. But yes, you can compare them to ShopRite because they cover almost all the LSM. But so far, Checkers, ShopRite are the ones who've been doing so well. Look at the share price up over 50% compared to that one of Pick n Pay up only 14%.
Makwe Masilela, thank you very much for that markets update. He is the Chief Investment Officer and founder at Makwe Fund Managers.